Welcome to Money on Tap, your personal finance headquarters, where we bring out the professionals, experience, and some fun in what we call three-dimensional investing, utilizing insurance, brokerage, and fee-based planning. We believe wise investing starts with your plan. And your investments may have merit and relevance to a time and place, but this all really depends on you and your objectives and your goals. My name is Seth Krussman, and I'm here with Ben Brayshaw and John Ryder. And we're planners and partners with Brayshaw Financial Group. Good morning, guys.
Good morning. We are looking forward to talking about some wise investing, as you were talking about, Seth. Looking forward to that.
Good morning, Seth. How are you doing this morning?
Fantastic. And we're glad to have you listening to Money on Tap. If you're looking to sit down with an advisor, start making some of the right steps towards your financial goals, we welcome the opportunity to do that with you. And you can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. And that's also our website address is www.yourmoneyontap.com. And you can also find us at Facebook, 3D Investing. You know, in today's world, there's a lot of different ways that you can invest your money. And you can take your hard-earned money and invest it in your own business. You can invest it in real estate, land, stocks, bonds, mutual funds, CDs, oil, gas opportunities, you name it. It's the universe is
inexhaustible list, right?
Right. It's almost unlimited. So today's show, we don't want to necessarily focus on all of these types of investments, but we do want to talk about two different styles of investing. There's active investing and passive investing. And there are, certainly upsides and downsides of both of these. And I think we're going to have a good time today. And hopefully you gather some information that'll help you to make good choices down the road.
Before we get into active and passive investing, it's time to discuss money in the news. So this is the time of our show where we bring some recent headlines into focus here. And I thought I saw an interesting one yesterday that I thought I'd bring up. Now, Seth was kind of saying, this is kind of a controversial type of thing that we're talking about.
Love controversy, John.
As we start the show, we're talking about guns. But, all of us
we're not talking about you?
We're not talking about me. I know usually we're talking about me being controversial, but today we're going to be talking about guns.
Throw me under the river.
Seth, he's in Oregon.
Seth Controversial Krussman. We all know that's his middle name.
No, you can you imagine living in Oregon? I mean, the controversy that's going on over there.
Oh, my goodness. So you guys, when I drive to work, if I take a certain way, I happen to go by this gun store. And this gun store has a huge, big picture.
I like gun stores.
Yes. Yeah,
I like gun stores.
I do too. But it has a big picture of Obama, a caricature of Obama on it. And it says, "Thank you. Congratulations, President Obama, the best gun salesman of all time." And so I was reading through a publication the other day, and I saw an article that talked about Remington having to declare a bankruptcy. This was by the AP, Associated Press. And it's talking about how Remington's really having a hard time. Because I don't know if you guys all remember, as we were leading up to the election, and we were all really thinking that Hillary was going to be our next president. Now, I'm personally thankful that did not happen. However, it was basically up until about 10 o'clock at night when all of a sudden the commentators on CNN were having this very serious discussion back and forth. And then MSNBC, they were getting all concerned. Well, the problem was the fact that the tide was turning. It actually was turning into Trump's presidency for the next 4 years as opposed to Hillary's. And there's a lot of concern out there. But, that same concern, it kind of mirrored with the gun industry, because the gun industry was looking at having a very, very positive 4 years, or especially a positive month before the inauguration of Hillary, of selling a lot of guns. And the fact is, the opposite happened because President Trump came in, or then potential candidate Trump was talking about but he was going to be a good friend of the NRA. And he certainly has been since he got into office.
He's not a good friend of the gun stores, though.
He's not a good friend of the gun stores, that's for sure.
This might change who the NRA decides to back next election, because they might just take a look at the profit structures and decide to go and just go back, whoever the candidate is that might try to limit the sales just to promote Yeah, the gun
Or gun sales.
Gun sales.
That's an interesting perspective. I hadn't even thought about that. Hey, listen, let's vote the guy who hates us the most, so revenue skyrocket in the gun world.
So here's the headline: Beleaguered gunmaker Remington points to bankruptcy court. And it says Remington, the gunmaker, beset by falling sales and lawsuits tied to the Sandy Hook Elementary School massacre, has reached a financing deal that would allow it to continue operating as it files for Chapter 11 bankruptcy protection. And so this is actually the maker. Remington's the maker of the Bushmaster AR-15 style rifle that was used in Connecticut. You guys will all remember what an awful tragedy that was, and just terrible. Now, eventually, Remington was cleared of any wrongdoing in the shooting, but investors are just certainly repulsed by the manufacturer and all that. And again, I would come back and say, well, it's not the manufacturer's issue. It's those who purchase these things and do some awful things. But anyway, the election of President Trump has actually taken a toll on the gun industry. So you combine that with these lawsuits that are going on, but you combine that also with the sales of guns are just not skyrocketing like they were expecting. Yeah.
Well, I mean, I think that gun. We're going to get into active and passive, but right. I mean, honestly, if some of the stocks in the gun manufacturing industry are dropping like
Sturm and Ruger's down. And Remington's not publicly traded, but Sturm and Ruger is. It's a similar competitor, a rival. They're down 14%.
Yeah, and I mean, you think about that. I mean, we talk about active and passive. I mean, there's going to be a point in time where maybe an investment in that might be relevant as an opportunity for an active investor. And we were going to get into that. But that's just kind of interesting that that's getting hammered. Because next time there's an election for maybe somebody who's really anti-gun, it might be an opportunity to buy.
Sure. So, but yeah, this is an interesting article, and interesting to see what will happen with Remington. Remington's not going away. Obviously, they're restructuring because they're figuring this is the best way for them to go forward and the best way for them to make it work for themselves. So,
I thought this next article, John, is pretty funny.
Okay, so Seth, did you see that? Did you see the article we were going to talk about?
Yeah, I'm looking at it right now, and I'm embarrassed.
It is. It's embarrassing for Christians out there all over. But not necessarily for Christians, because I have to tell you, I think the way this all ended up was pretty good. But anyway, this is church out in Jacksonville, Florida, and this is from CBS Action News, and it is called Christ Fellowship Church. It's a church that's been around for 9 years or so. But anyways, the article title is, "If you don't get a tip for your service, don't put it on Facebook." So they had this lady.
This is awesome.
Yeah, they have a server at Outback Steakhouse in Palm Beach Gardens, Florida. She said she was fired on Thursday after posting on social media that she was not tipped for a 735 takeout order placed by Christ Fellowship. So this lady, Tamlin Yoder of Lake Park, 25 years old, she said that Christ Fellowship ordered 25 steak dinners, 25 chicken dinners, and 25 orders of some potato side dish on Wednesday morning. And she took the order over the phone, put the order together, she took payment, and then she took the order to the car. And what happened was that the person that placed the order either didn't know how to place a tip or didn't know the whole process. I think what happened was, I read somewhere else, that the actual order was placed on the phone, no tip was put on it, and they sent some intern to go pick it up, and the intern came and
some
let me just take
volunteer
it.
that had nothing to do really with.
So anyway,
hey, it's paid for. Don't worry about it.
It's all just go in, grab it. We're all set. So anyway, this lady this 25-year-old was not happy. In fact, she wrote on our Facebook page. She said something to the fact that exactly what happened. Hey, so Christ Fellowship Church placed an order, and it was an expensive order. I did all the work. I got paid nothing. Now, she didn't mention, in all fairness, she didn't mention Outback Steakhouse in the deal at all. So anyway, she put that up. So she has a friend of hers that says, "Hey, I just read your Facebook post. You ought to take that down. But here's the deal. I know someone over at Christ Fellowship. I'm going to call him up and see what's going on." He calls up the person over at Christ Fellowship and talks to this person over there. Christ Fellowship feels bad. They get on the phone and call Outback.
Yeah, good for them. They're like, "Hey, listen, we wronged somebody unintentionally."
Yeah, they had no idea. So they got on the phone. They said, "Hey, you know what? This was not intentional at all. The person that went and picked it up thought it was all taken care of. It wasn't. So we apologize. We want to take care of the tip." Outback heard about that, looked at the Facebook page, and fired her on the spot.
Because it was in her contract.
It was in her contract. You can't complain about customers, which totally makes sense. And so
she could have complained as long as She didn't name him.
Yeah, and
Probably,
she did.
yeah.
She
Yeah,
did.
she named him
And
outright.
so what was interesting for me to see as I was looking at social media, you should have seen the people beating up Christ Fellowship Church. Oh, just how come they're buying steak dinners? Are they supposed to be helping the poor? I mean, they were going on and on and on about how awful it was that Christ Fellowship tried to gyp the company and this and that. So anyways, Outback felt bad.
Yeah. Well, I mean, the thing that I think is interesting is, I mean, I don't really do, I haven't done takeout from an official restaurant that I can think of. Like I was trying to think of that in reading the article and kind of going through it. And I'm like, I don't really like if you go through a drive-through or whatever, you're picking up at, Five Guys or something like that. You usually just take it and go,
Yeah.
I just didn't know that the servers prepared it. Well, I felt bad for the server, and I totally understand.
Sure.
I mean, I waited tables in college.
Sure.
I mean, if she's doing this work at, below minimum wage, because servers most of the time get paid below minimum wage, they live off their tips, then I really felt bad. Like if she spent all this time doing that. But I don't think that anyone had and I don't think I even knew, I would think the restaurant as a whole, like the employees, the cooks, the chefs, I wouldn't think that the servers who are paid below minimum wage would actually prep the level of what she was doing.
That is a good point. I heard someone talking the other day that it should be a hostess who's actually getting a regular wage as opposed to $2 an hour or whatever.
Right.
But anyway, so she ended up getting only $18 in tips for that day, and she's living and dying by her tips, so I can understand that. But probably the way to address that would not be the way in which it was done, because it ended up costing her a job. In Christ Fellowship Church, they felt terrible about it. They said, they listed on their website something to the effect that, hey, we did certainly not want her to lose her job. We feel terrible that she didn't, and we don't think that's necessary and all this. But anyways, hey, so if you don't get a tip, do not complain on Facebook about it.
Here's the thing
or anywhere.
Ben and I have waited a lot of tables, folks. And I mean, college and afterwards, different periods of time. We've even worked some of the same restaurants together.
It's funny, Seth, because I don't see both of you as servant type people. I just don't. I don't get that.
You don't think my servant's heart is what you're trying to say?
I didn't want to say that, but I guess I said it. Yeah, I'm sorry.
Yeah.
I'm sorry. I'll take that.
We were actually very good at our jobs back then.
Yes.
I can go back and I can remember similar experiences, like the table that was like, they were $500 plus on a table, and I got like $10 or something from the tip.
That's not good.
Or I remember the table that tipped me a dime.
Seth, let me ask you this: was that an accurate reflection of the service that you delivered to that table, that dime?
Probably at that point it was.
Ben was supposed to grab the drinks, he did, and he spilled them all over the people at the restaurant.
I remember I had this guy. I still remember at the table him telling me the excellent job I had done waitering at his table, and he left me like a tiny tip compared to the check, and I was like, really? Yeah. So there's just been people that don't understand the process, and I think. Here we had some sort of volunteer doing this. Probably didn't know whether
the pickup person.
Right.
Yeah,
I don't know that they actually paid for it or not. Did they know that person was living off? I mean, there's so many variables here. Ben
Outback gave him the whole order back. They gave him all the money back.
Yeah, that was pretty interesting.
Very big of the manager.
Here's what I would like to say is that this person that put the Facebook post on says that they're committed to, being a server, and they love the restaurant industry, and that one day they would like to own their own restaurant. And I would caution you to learn from this experience, because in your own restaurant, if your customers feel like they might possibly be put on Facebook for not tipping properly, that would not go well. And just not a model to follow after, folks, in any way. I think that's going to do it for us at Money in the News today. We're going to take a quick break. We'll be back with active and passive investing, kind of the makeup of those and what you need to know about the history and what does that even mean. You're listening to Money on Tap. You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com.
Hello, my name is John Ryder, a partner with Brayshaw Financial Group and one of the co-hosts of Money on Tap. 10,000 Americans are turning 65 every day, and planning a successful retirement today is more challenging than ever, with a roller coaster stock market, political and economic uncertainty, and so many unknowns when it comes to the escalating costs of healthcare. Let us show you how we utilize the 3D method of investing, utilizing insurance, brokerage, and fee-based planning. Using our experience, let us help you plan for a successful retirement. Now is the right time to start getting help. Give us a call at Brayshaw Financial Group at 855-226-8551. Headquartered in Bedford, New Hampshire, we have offices across the country. We would love the opportunity to meet with you. There's absolutely no cost or obligation to meet with us, and we welcome you to our offices. Call 855-226-8551 today.
A lengthy vacation requires some thoughtful and detailed planning, and few people would go on such a trip without the necessary preparation. On our Cliff Notes edition of Money on Tap, Seth Krussman shows us with his example that the same care and thoughtfulness should also be given to our retirement planning.
This is a journey. This is a project that you have an opportunity to invest in and to uncover and identify how you want to live your life. And I think how many times, we go on vacation. A great friend of mine took his whole family on a mission trip to Guatemala this last year. And that looked like a tremendous adventure. And how much planning does it take to get that to happen? I have no problem involving myself in creating a plan around something like that. And if I can get my mindset to be thinking that way, like, wow, I am planning the largest vacation of my life. How much fun can that be? And I can't wait to sit down and talk to you about that, right?
Thanks for joining us for this Cliff Notes edition of Money on Tap, with great tips from the pros in three-dimensional investing, utilizing insurance, brokerage, and fee-based planning. Now here's more Money on Tap with Seth, Ben, and John.
Welcome back. You're listening to Money on Tap, your personal finance headquarters, where we bring out the professionals' experience and some fun in what we call three-dimensional investing, utilizing insurance, brokerage, and fee-based planning. You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. You know what we're talking about today, for those of you just joining us, we're talking about active and passive investing styles. And, we're going to talk about we're going to add some controversy later on, but that's not where we're going to start right now. We're going to go ahead and just try to give you the layout here of what does that even mean?
Yeah, so the name of the show today is Active and Passive Investing. Notice I did not say active versus passive investing, or which is better. But basically, we just want to describe, I think, and really get a better idea of the mechanics of both. It's one of the actually most hotly contested debates in finance today is which is better. Is it better to be an active investor? Is it better to be a passive investor? Which is the best way to be? But the debate has actually spurred numerous academic studies out there that claim to identify which performs better. So active is better because this happens, or the passive is better because it spurs this kind of investing. And we're going to talk really about the differences between the two. So Ben, I thought what we'd do first of all is really kind of start talking about active investing and how that works.
This is the debate of this debate will never end. I think defining where the line of active and passive and where they start and stop, and as we get through this process, I really hope that we can, together the three of us can really help people get a better handle there's some lingo here that people say, oh, I'm an active investor or I'm a passive investor, and then there's a declaration in those statements of, what that means behind the scenes and so forth. And I think it's going to be healthy to kind of walk people through this process. And I think the active, starting with active, John and Seth, essentially active investing is taking an active role or actually creating, movement or change or intentionally exploiting a scenario to increase your profitability. Okay. So that's somebody who's saying, in the generic terms, saying, hey, I think this, XYZ stock is potentially profitable in the future, and I'm going to buy it today thinking that I can exploit a return out of that and so forth.
So
yeah, it's what investing really has always been. Buy, sell, sell.
Right.
I mean, they're really
I like this stock over that stock, so therefore I'm going to buy this stock because I think it's going to be more profitable.
Or what is the best
Right.
way to corner the market? What's the best? I see some different things out there. If I was a fund manager, I see some different potentials out there that I think would make a lot of sense. We have a big issue in the environment with this issue, and so as a result, I want to promote this product.
Well, you brought something up right there that I think is interesting to, or needs to be understood, is that there's funds, right, that people invest in, 401ks invest in, and inside of a fund, that manager, like if you have a manager that is managing that money, that can be an active manager, or it could be a passive manager. Just because it's in a fund doesn't necessarily mean, and because you buy that and you passively buy it and walk away, that's a passive type of an investment strategy, is just to buy and walk away. But that fund manager might be very active.
Oh, absolutely. So there's lots of different moving parts in here and defining the breakdown, which I'm kind of excited because there's a lot of, I mean, we're going to get into the nooks and crannies of when someone might be taking a passive approach and an active scenario is occurring, kind of as you're pointing out, Seth. Someone buys something and they say, hey, I like stock X over stock Y. Well, if you buy stock X, that was an active moment, but holding on to it and ignoring ups and downs in the market is your passive approach. If you sell stock X and you say now stock Y is a benefit, and you buy stock Y and you sell stock X, that was an active movement. That was a decision to exploit return through your change and your ability to create returns.
So let's go a little bit into the benefits of active investing. And that is where you're actually making conscious decisions. You're not just letting the money sit there, but you're actually making a conscious decision. So one of the benefits of actually having an active investment management style would be that you have the ability to adjust portfolios based upon what's going on in the market right now. So let's say that you knew beyond a shadow of a doubt that we are at a low point in the market. Of course, that's not where we are. But let's say that you knew that we were at a low point. It was as low as it could go. And you knew that there's some different opportunities. You might realign or shuffle the securities that you have in your bucket of stocks out there to align with what you think is going to happen. Or maybe you may be someone out there that sees interest rates going sky high, so you might want to adjust how you have your portfolio designed. Or if
all of a sudden you discover there's some sort of crazy thing that's going to happen, that there's going to be an oil shortage, and you decide to invest in oil. I mean, there's people hear about opportunities all the time, and making changes to informed opportunities is active investing.
Well, the flip side of that is, too, I was talking about potential to see growth. What if you see storm clouds coming? And if you're a fund manager out there and there's some bad times coming, as an active investor, active investment manager, you might say, well, you know what? I want to pull out of the market. I'm going to tactically pull out of the market. And I'm going to take the money that we have invested in this portfolio and pull it out. So that's the benefit of active investing. Right. So risk management is one. How about, Seth, short-term opportunities?
Well, I think Ben just hit it on the nose right there.
Thank you, Seth. Thank you.
Seeing something.
John, would you hit it on the nose more often, please?
I'm going to try.
Well, all right, you guys, let's get down to business here. So we've got short-term opportunities, basically, and how investors can just use, different strategies to, pull out or extract, basically, growth out of a market opportunity. For instance, just take like that oil and gas that we were just mentioning. Ben was just mentioning, that the oil and gas was way high, and then just saw a pullback in the market. And so somebody might take a look at that and say, well, that's a value opportunity, and it may not come back immediately. A lot of people that are looking for value in short-term opportunities may kind of get caught in that value trap, is what it's called, where it just takes a while to get out of that. But a lot of the times market bounces, like we've just saw in the market pullback recently. That might be a short-term opportunity that somebody says, great, finally the market takes a breath. I'm going to buy now, thinking that, in the next month it's going to return back to its, what it was prior. That would be a short-term way to kind of extract gains. The outcomes, I think, is really where, the benefits might potentially lie in an active strategy, where you just have more control over what you're going to buy, what you're going to sell, how you're going to interact with the market. And that can be a big part of what an active manager is really trying to do. Hedge funds would be an example of that.
Well, I think, Seth, you're talking about that, right? I mean, if you buy a stock in the idea that you are going to sell it for the next better stock or the next better opportunity, or you're going to buy whatever you're going to buy, and you're thinking, if you buy it and say, well, I'm just going to hold this forever, that's passive. Mm-hmm. But if you say, hey, I'm going to buy this, and at some point in time, I'm going to sell it, and I'm going to find another better investment scenario, you are, in my opinion, even if you're holding it, you are an active investor because you are seeking opportunity. Once you seek to exploit opportunity in varying degrees in specific intentional efforts, that is when you are an active investor. Would you guys agree or disagree?
No, I think that makes sense. But I think when it comes down to it, the benefits of active investing comes down to three main areas: risk management, like we're talking about, short-term opportunities, stuff that you mentioned, and also the outcomes.
I'm just going to disagree with Ben, because it's been a while.
It.
Yeah. And because I just threw him out there as such a great example, I'm just going to go ahead and just disagree with him. Just throw a little bit of parody in here.
Put on the boxing gloves.
I got nothing to back that up. I'm just going to do it. So did we want to move on to the benefits of the passive, or just understanding more of the passive nature of investing?
I wanted to go more into talking about the limitations of active investing, because there certainly are limitations. And, when we think about it, there's certainly some positives, meaning that we can actually make proactive decisions based upon what's going on in the markets. We can look for short-term opportunities. We can look for outcomes that would be favorable for clients. But there are also some limitations of active investing. If you have someone actively trading a portfolio, well, guess what you're going to have? You're going to have more costs than you would if you were going to have it in a portfolio that was not being actively managed. So whenever something's being done, there's an active management style in place, where there's buying and selling of securities.
Even if that client is buying something passively, and it might be an active underlying style that's still active, and you're still probably going to have more expenses. That's correct. I agree.
Right.
So that can be a limitation of active investing. There also are some limitations as far as some investment minimums when investing in active strategies, and those are some things. For instance, and I know this is not a type of security that we use here at all, but just as an example, if you were out there buying a hedge fund and you wanted to have an actively managed hedge fund, even though you probably would have lost a lot of money, they haven't done very well. But anyway, there is certainly a minimum to get into these things. If you're an individual, could cost you $250,000 up front.
Yeah.
To be able to have those monies up front, and that's probably not most people.
That is minimums and so forth are a complex scenario. I think what I find is that there's a lot has to do with between active and passive, and we'll get into some of the definitions of passive here in a minute, but it has a lot to do with age, and the younger you are, potentially the more risk tolerance you can take. I mean, you can get more aggressive essentially, and so passive investing becomes an easier appetite to swallow when you're younger. But when you become nearing retirement age and you are starting to get woefully concerned about your loss potentially of finances, sometimes it's like I'd rather pay somebody to actively manage my portfolio so that we have better potential of protection of the downside. Because in 2008, I mean, if you truly are passive, meaning you're not making any specific decisions of movement, this, that, and the other thing, you should have been totally happy with the 37% loss. And you should have enjoyed it because you truly believe that is 100% the scenario. That's the true ultimate. That is the
kind of the true litmus test of are you a truly passive investor?
If you were getting nervous and you were invested passively, then you were your own financial planner at, handling an active management, saying, well, I have my limitations. That means you're an active investor. You're just not as active as others.
So active management really, guys, is allowing the human element to be at play there. In other words, there's a single manager or a co-manager.
I think that's one of the greatest deficits or potential deficits to the active management, because somebody could have a bad day. Make the wrong choice, make the wrong decision. Depending on whatever their research and data is telling them, they may not be able to see beyond that, and that could be just part of the human element. And I think some of the what I've pulled out of some of the better active managers is they rely so heavily on data to be able to trade signals and, market trends and some of those other things to be able to, reverse engineer historically what a strategy was going to play out at. And so pulling all that information in, they're kind of trying to remove the human element out of what it is that they're doing in an active strategy, if that makes any sense. And by doing that can have great success. The piece that we've seen is just some of the people that get the fat finger on the trade desk. And that was one of the recent things that we were trying to figure out with the market correction recently is, hey, did anybody push the wrong button over here?
That reminds me of that Hawaii thing. Remember that Hawaii missile crisis over there? This one guy pressed the wrong button. Actually, I guess he really didn't press the wrong button. He really felt that was going to be a problem. You remember hearing about that, guys? Okay.
No.
So you guys hear about this? Okay.
Oh.
This was a pretty big story in the news not long ago, you guys. Are you guys reading the paper or you're watching
Just
the news?
focusing on other things, John.
Okay, so anyways, in Hawaii,
don't do that.
In Hawaii, okay, I'm glad I'm up above your generation. Yeah. So in Hawaii, welcome to the world, guys. In Hawaii, there is this guy. There's a missile alert that said there's incoming missiles coming in. This was about a month ago in the news, and this, or maybe a little bit more than that. And this guy.
How come we weren't reporting that first, John?
It was supposed to be a test, and the guy took it as an actual missile alert. They put out for 10 minutes. No, for 32 minutes, Hawaiians all across the state were freaking out. They were putting their kids down inside manhole covers and hiding their kids because they thought an incoming missile was coming. And it all was because a guy made a mistake. And the guy thought it was the actual technician thought this was an actual alert. And so sometimes human element can do what? It can create problems. And that's exactly what it can do inside an investment portfolio. Now, are you guys being honest with me? No one heard about that story.
I didn't.
Wow.
This is the first.
And Seth, you vacation a lot in Hawaii.
I wouldn't say that, but I've been there.
Now, don't you have relatives there, Seth?
Uncle
Bill.
I used to, though. Yeah.
Yeah.
A mother's aunt and uncle that were in part of the sugarcane operations over there. Yeah.
Okay. So anyways, human element can be a problem. Human mistakes can cause a problem, whether it be incoming missile alerts or whether it be making a bad decision when it comes to investments. So
I mean, the other side of active, and thanks for the news flash.
yes, hey,
John.
sometimes we need some help.
But diving back to the actual conversation here, when we talk about active, we've talked a little bit about when somebody is acting in an active process. But let's talk about when someone says, I want you to manage my portfolio, and we do an active strategy. Because we do both here.
Sure.
We do passive
Sure.
and we do active. I would say that we would even have, there's always going to be a tilt somewhere, somehow, to, even in the most passive strategies, some sort of, when you're giving any oversight and potential change or that condition, that's going to have an active perspective on it in some level. But, from the standpoint that we do active and we do passive, the concept of the active piece is gonna really rely, as I was chatting about a little bit earlier, is just the risk management portion of it. Like, first of all, you got risk management, and then you're gonna have, what is the time horizon around that investment? Because that's gonna really, like, you could be a young 25-year-old, young person trying to get into investing, and you might say, well, I've got 40 years till I potentially retire. And you say, well, what's this money for? Well, I want to buy a condo, or I want to buy my first XYZ. Well, then your time horizon's not 40 years.
Yeah, time will definitely dictate how that portfolio is invested.
So purpose of funds is very, very important, and obviously a detailed scenario that you have to really vet out with your client. But then you have, in the active world, you have the diversification, you have, maybe a targeted investment return that you're trying to accomplish inside that risk tolerance. There's all these different moving pieces that, add complexity to active investment. But then ultimately, what are you paying for? Because you're going to pay more money traditionally and in the active management style because you're paying someone to do something for you, which is manage it.
Right.
And ultimately you have to understand what you're paying for and how much management you're paying for, because you've got CFAs in the background potentially. You've got, the advisor potentially. You've got the third-party manager potentially. You've got the holding company. I mean, you have potentially all sorts of different fees and expenses and so forth that are going to be, drains, as we call them, on your returns, right? That's going to affect your return. But ultimately, this is the debate of the 21st century here, because we have gone through some of the biggest headwinds as well as some of the biggest, backdrafts as you can possibly have. I mean, we went on a 9-year tear, but we've had, 3 recessionary events in the last 20 years. I mean, that's crazy. It's like hit, and then we fly. Hit. It's like there's all these different things. And so this last pullback is interesting because there's not a lot of fundamental backing to why the pullback happened. There's a couple of different
market
scenarios.
kind of got ahead of itself, right?
Well, yeah, it kind of jumped high and then, created swings in the 50-day moving average. And there's a lot of things we could get into those details, which is way too far into the weeds. But in reality, we are set for an economic, I think, catapult in the next few years, especially with the tax breaks that we're looking at. We've chatted about in the past.
So let's talk about the passive strategy bit. Getting into the active bit, let's talk about the passive strategy. Before we do that, we're going to take a quick break. We'll be right back with more passive strategy investing and active strategies. And you can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. You're listening to Money on Tap. Hi, my name is Seth Krussman, partner with Brayshaw Financial Group and one of the co-hosts of Money on Tap. One of the biggest concerns and largest expenses people face today is taxes. Without thoughtful planning, taxes can destroy future retirement dollars, eliminating the possibility of a timely retirement or dreams of what you want retirement to look like. If you're like most people, you're getting closer and closer to retirement, and you may be wondering if you're taking the right steps. Will my income be enough? Will rising taxes force me to give up my dreams? How does inflation factor into all of this? These are real concerns, and you're not alone. Putting a plan around your financial future is what we do. If you have questions when it comes to your financial security, and if you're looking for a personalized solution, contact us at Brayshaw Financial Group, 855-226-8551. It's time for you to start getting answers to your questions. Headquartered in Bedford, New Hampshire, Brayshaw Financial has offices across the country. We'd love the opportunity to show you how we can help. There's absolutely no cost or obligation to meet with us. Call us at 855-226-8551. 855-226-8551.
On this edition of Money on Tap, a runner alone in a long-distance relay race. That's how Ben Brayshaw describes the feelings of many people who are dealing with investments and retirement.
Usually no one really around you, and you're running by yourself, and it's like 6-8 miles. You're waiting for the big marker to come up to point you to go a different direction. You're like, am I on the right road? Am I going the right direction? It's all dark around me, and I'm not sure. I'm alone in this space. Yeah, this is how a lot of people feel in this world about their investments and their retirement. They feel like they're running on a pitch black road. They think they're going in the right direction. They're pretty sure. They're not exactly aware of where to stop and ask for help. This is where people like us come alongside, and we bring a lot of light with us. When you have a planner, you have someone, like in the conversation I had today, it's bringing all those pieces together, because you have this 401k or whatever retirement plan you have at work, then you have your home, and then you have some other assets outside of that. You're basically trying to funnel that all into this one item called retirement. And I think ultimately, most planners, most firms just look at the assets outside your home and outside your 401k, and those are the two largest assets.
Sure.
So how can you really do planning when all you're looking at is just a small picture of what's really going on? And we have to have a holistic viewpoint, and we need to really break in to getting you to have a successful retirement event, whether it's at 35, whether it's at 45, 55, or 65, whatever that time period is. That's where you have to have your trajectory set and ready to go and get the help.
Stay that course.
Yeah.
Thanks for joining us for this Cliff Notes edition of Money on Tap, with great tips from the pros in three-dimensional investing, utilizing insurance, brokerage, and fee-based planning. Now here's more Money on Tap with Seth, Ben, and John.
Welcome back. You're listening to Money on Tap, your personal finance headquarters, where we bring out the professionals' experience and some fun in what we call three-dimensional investing, utilizing insurance, brokerage, and fee-based planning. You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. You can also find us at Facebook at 3D Investing. And today we have been talking about two different investment styles, active and passive. And we've been mostly on the active side of the story here. And we're going to dive into the passive bit. So what is a little bit about what is it? What is passive? And, it's also been called indexing. And for a little bit of history on where does that even come from? It's originally was started by called Bogle's Folly. And started out as the world's first index fund on August 31st, 1976. So, it's been around since Ben and I have been here. And it was actually kind of met with a little bit of derision for its central premise. And what is that? That just buying and holding the broad stock market would provide better results than trying to beat it by picking stocks or actively picking these stocks. So you can imagine how the practitioners in the market were buying and selling, and they had this idea that was like, hey, what you do is never going to beat this strategy right here, which is kind of simplifying things. And that was probably not exactly what people wanted to hear, because that was, that initially could mean, hey, that's my job. That's what I do. And this strategy that came out quite a while ago has more recently gained the fame and the attention of a lot of people in the industry, and has a lot of momentum around it. A lot of money is moving in this direction, and we're going to talk a little bit about, hey, what's the good stuff here?
So the father of this movement of the Bogle strategy here is actually a guy named John Bogle, who is an American investor, philanthropist. It's actually Bogle.
Oh, okay.
B-O-G-L-E.
Is that an East Coast, West Coast thing?
I don't think so. I think that's just across
Bogle?
the United States. People outside the United States usually say Boggle.
Right.
So, okay. Yeah. So John Bogle is the founder and retired chief executive of the Vanguard Group. And they basically started a business years ago where they just talked about, hey, it does not matter exactly. There's not necessarily a need for an active strategy. The best thing you can do is buy some stocks and just let the money sit there for a long, long time. And this doesn't make any sense to go in and out of the market. Warren Buffett might say the same thing. Warren Buffett might be the same kind of guy that said, hey,
what's hilarious about that is Vanguard's been advertising their active management more so than ever right now.
They have to maximize inflows, and they have done an extremely good job of attracting investors who do not have an advisor, who really don't want to pay for an advisor. And so if you look out at the Vanguard funds out there, a very, very cheap way to get your investments done. But the fact is, there's really, with those, no active management. Although, Ben, you were just saying that you've seen some advertisements for Vanguard doing some more active investing.
Yeah, there's been a push. I mean, I was reading an article. I don't have no any idea where it was, but I was reading an article about it. I've seen it on TV where they're advertising their active management, and they're trying to slide people into that area to offset essentially, I mean, you can't run a business on zero. And the concept or the question mark is how are they keeping their doors open with all the actively, it's like, so anyways, at those prices and the competitiveness of passive investing and this indexing process is whether or not this push to active is to offset the theoretical loss they may be having in the passive side. Now, I have no knowledge of the truth of that. But I did see, right after I read that article, I did see on TV Vanguard's, some sort of, ad or whatever about their active scenario.
Well, Bogle certainly is very, very well known. In fact, he started the first index fund back in 1975, and it was his idea that instead of beating the index and charging high costs, the index fund would mimic the actual index performance, and thus it would be achieving higher returns with lower costs. And I can see certainly the sense in that. But one of the things that you mentioned earlier, Ben, there's a lot of different things that come into play and a lot of different variables. For instance, if we're saving for a goal within 5 to 7 or 8 years, that may be a good strategy. If it's just a couple of years, it may not be. And the fact is, with the index, when we all can see what has happened with the markets over time, they go up and they go down. And if you're okay, as Ben, you were talking about when the market was down 37%, if you're okay with taking a big loss on a portfolio and just waiting for that to come back, then that may be a perfectly fine place for you. Or maybe you would prefer an active manager that would help to minimize those losses during those downtimes and maybe have a loss of 10% as opposed to 37%.
Right. And there are some active managers that can, that have done those types of performances. We've seen them, and it's kind of like, hey, hindsight's great. Glad you guys did so well, and so forth. I think, my point really here that I would say is relevant to, our audience, is that there's no one is right and one is wrong. I mean,
absolutely.
And I think, and by talking about Vanguard, for instance, clearly if they're offering an active style, they believe there's value to it, right? I mean, even if it was a small value, they believe it is a value. But there's kind of been this perception that it's the only way to invest. And
they're called Bogleheads. So the fans of John Bogle of that method of investment, they're called Bogleheads, and you can look them up online. It's pretty interesting. They have all these different ways in which to save money and all that. But you're exactly right, Ben. There's a right time and a right place.
Is it a bogglehead, Seth?
Seth calls them boggleheads. Yeah.
Yeah. I've got one sitting on my desk right here. It's kind of
a bobblehead.
Okay.
Okay. But there are certainly different benefits to going in a passive style and different benefits to an active style. It just depends upon what kind of investor you are and what you're looking to accomplish in that.
I find I don't think we're going to get into all the
nuances.
Well, I mean the performance and the histories and the comparisons, because there's so many different active managers and there's so many different pieces of comparisons and so forth. But I thought it was interesting that Warren Buffett, who is a massive proponent of passive investing, which I can appreciate, and so forth, that he's been having competitions with people.
He's doing pretty well too, from what I hear.
He's doing well. Yeah. He's doing well. Just wonder how he would do against other ones. It's the problem is that I think you look at the different time horizons and they're comparing, and it doesn't really matter who they're comparing. The truth is that there's times where passive beats active, and there's times where active beats passive,
sure.
And everyone knows that.
Yep.
I think the thing that really should be the active play for most people is to actively know which one you should be doing, right? And that's where it takes advice and help. And I think, when the market starts getting a little bit high and you start getting nervous, that's when you want to you acknowledge that, hey, listen, this market's bigger than me, and maybe I need a little bit of guidance here. It doesn't necessarily mean you have to move to an active program. It may mean that you're just getting advice and you're actually seeking additional help, because, we are one natural disaster or human disaster, like a nuclear missile out of North Korea or something or whatever. We are one major disaster away from a crash, right? It could be tomorrow for all we know.
Sure. Yeah, we've seen some big pullbacks, but it could be some major pullbacks.
Yeah, it could be horrific. I mean, if they drop a nuclear bomb on, the desert Saudi Arabia area or whatever, and you can't even go near the oil and gas. I mean, there's a problem there, right? I mean, separate from the human life lost and the aggressive nature of that and dealing with that as a worldwide, political organization, we have stock market problems, and those are things that are going to send and if you're in retirement, depending on those assets, that's a different time zone that you need to be looking at in your life of, how do I solve that problem? Or if you're 5 years or 3 years away from retirement and that happens, you may not be able to retire unless you've taken some deliberate, intentional steps to do that. And there's a reason why people like us exist, and there's reasons why people use us for that kind of stuff too. I mean, that's a whole other side of it.
We've had a great time on our show today talking about different types of investing, and we hope you've enjoyed listening to Money on Tap. As you've been listening, we hope you can understand how both active and passive can and should be a part of your investing. And hopefully you hear the term active and passive investing, and you can have a better idea of how both of these concepts work. And when working with our clients, we don't have a rule of how much your portfolio is active or passive. Our job is to help you get where you want to go. And our advice on what you should do is customized for the particular client, for your situation, when you're sitting in front of us. We do have investment ideas that we'd love to offer, but none of those are going to be boilerplate. And so our advice is based upon thorough understanding of your particular and unique situation. Now, we'd love to have that opportunity to sit down with you and see how we can help. And you can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. You've been listening to Money on Tap. It's been a great time with you guys today. Thanks a lot for listening.
Thank you, guys.
Thanks, everyone.
The views expressed are not necessarily the opinion of this radio station and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. No strategy, product, material, or tool mentioned can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information, products, materials, or tools mentioned should be relied upon when coordinated with individual professional advice. Past performance is not a guarantee of future results. This show may be subsidized in whole or in part by a product sponsor or issuer. Securities and advisory services offered through SagePoint Financial Incorporated, member FINRA SIPC, and a registered investment advisor. All other services offered through Brayshaw Financial Group LLC are independent of SagePoint Financial. SagePoint Financial and Brayshaw Financial Group do not provide tax or legal advice. Main office is located at 116 South River Road, Bedford, New Hampshire, 03110, and can be reached at toll-free 855-226-8551.